Hey, Heath here for Am I Rich, and today we're going to talk about, yes, another Groundhog Day edition. So this is the sixth one I'm doing, I believe. So it is March, and just this week I mentioned two stocks that I thought were buys. Now, I really thought I have been a little bit over exuberant on some of my picks. I think the timing might be a little bit off. I'm picking them maybe a little bit earlier than I would like to. But that said, I still believe in these companies for the most part that they should go up. So that sets ahead. Which stocks did I pick this week? And those I picked two. Two of them. The first one was MTY. I did a video on this earlier, and I had talked about this stock as being probably a good stock, but it had gone up in price basically through December into January. And it was a little bit too expensive for my liking. I thought if it got back down below the $60 level, it would probably be a good investment. And so I did a video on it because it was $59.30 at the time. And lo and behold, I thought this now is probably a good price to buy at. That's not to say, but I feel like I was a little bit over exuberant because I feel like the price could still drop a bit more. Because people, by the time they report their next earnings, people will start to realize that their earnings per share is changing drastically, and so their earnings basically are going to go down quite a bit relative to last year, most likely. So, and according to their guidance. So I do think this might not go, the price might go down a little bit more, but I still think it's cheap. And so, and like full disclosure, I think I did buy MTY a little bit lower than what it is on when I mentioned it. But anyways, so how did it do? First week, it went down to, it's still continued going down in price. It's $56.96. And so, yeah, it's down 3.9% since I mentioned it. So, not great. You know, this may be a stock that could be purchased even lower, in the next month or so. And I see a lot of upside. It's still fairly cheap, even if you kind of factor in its reduced revenue. I see this company still as being cheap, so that's why I still like it. And then there was Keyence, a company that's very involved in sensors, like laser sensors, optical sensors, etc., that are used in automation, robotics, among other things. And their stock price at the time was 67,730 yen, and it did drop as well to 66,160 for a decline of 2.3%. Now, that said, the S&P also had a decline of over 2% this past week. So it wasn't, I don't know that it was that drastic. I mean, it still wasn't good. It still underperformed probably the S&P. So again, this Keyence, maybe, I still see it going up, very likely to go up, but it might be a little bit early of a buy. Now, so that was kind of the picks I did this week, and then just the picks that I had thought of as buys in the past that I had mentioned. All of these, I have 8 other stocks basically, and the first one was CIBC. It's currently up 2%. Now, when I bought it, it was also, or when I suggested buying it, it's also had, I think, over 5% dividend, or near 5% dividend. Kiera, it's gone up 16% since I mentioned it. It also had a 6% dividend roughly. Facebook didn't have a dividend, but it's up 18%. Google, basically flat at minus 0.1%. Fiat Chrysler, it's down 4.8%, and it may go down even more, so there could be a better buying opportunity. But that said, in April, they're expected to announce their dividends, or have an ex-dividend date, and those dividends, they're going to have like a special dividend, which is going to be, like 10% or something crazy like that, and then have a like a 3% or something dividend after that for ongoing dividends. So I do think, you know, in the next year, if you held onto the stock, you could still see a pretty good dividend return. That said, I also think the company's undervalued, so that's why I put it on this list. The stock price might go down more though, so that's just something to be aware of. Protolabs, it's currently up 2%. And then there's Walgreens Boots Alliance, which is down 19% since I mentioned it. And this one, I really felt like I did a poor timing on it, but I mean, you know, it's after the fact, so whatever. It's still on the list. And really, I still see this company as very stable, long run, probably a growing dividend, better financials than major competitors like CVS, I would think. It may not have the same advantage in the pharmacy kind of health insurance, I guess, area, because they haven't followed the same route as CVS, but I do see it as a fairly stable company long term. And then we have RNW, which is TransAlta Renewables, and that one had over like a 7.8% dividend or something, and it's up 6.2% already. So I don't know that the growth is really that good for this company, but it has a really great dividend that seems to be growing, and it seems to be maintainable from what I can tell. So very interesting company there. So basically, when I talk about these stocks, I would think, okay, well, if you had purchased equal, every time I mentioned a buy stock, if you had bought an equal amount of money in the S&P, or put an equal amount of money in the S&P, you would have ended up with plus 0.6% so far. And so, you know, that's, in the long run, the S&P goes up pretty good, but you know, like it might go up. Some people, it depends on the estimates. It could stay stagnant for like 20 years, but in the long run, you're looking probably at like a 9% return on average. But that said, right now it's like 0.6%, since if you know, it did the installment thing. But if you were to purchase all the buy stocks that I had mentioned, I guess right now we'd be at 1.4%. So still beating the S&P after, you know, 6 weeks or whatever it is. So I'm kind of happy about that. I don't know that it's ever going to continue. I mean, if I keep picking stocks at the wrong time, in my mind, a little bit early, like, you know, they'll eventually, I think they can eventually have a good shot at beating the S&P, but you know, it's always better to buy lower so that you get a better return. You could average down on these, but I feel like for my experiment, it's probably, it's not the best, at least for my records. You know, I'd like to be better at timing when to buy stocks. So who knows if that'll happen or not, but it's worth a try. So a little bit long for this review, but I'd love to know what you guys think of any of these companies. If you think they're good companies still a buy, or if you think you'd sell them, or if you have any other great ideas for stocks, feel free to let me know. I'm trying to do this channel, I try and put out videos fairly frequently, but I'm trying to just talk about stocks because I like to, and also try and improve my personal speaking. And that's basically the goal of this channel. So feel free to subscribe if you're into it. Otherwise, thanks for watching, and we'll talk to you in the next video.